Yo, what's up? It's the AI revolution. I'm Cody Willard, Bryce Smith, John D. Oliveira. Bryce and I run a hedge fund. We invest in technology mostly. We're revolution investors specifically. Value revolution investors, according to my article that I wrote today. Go to tradingwithcody.com and or email support@tradingwithcody.com and we'll send you the article for free. Why not? Johnny D. Been working in AI for 30 years. Yeah, I said that right. Check the math. It works. All right. Topics for today. Oh, there you go. Yeah. Support@tradingwithcody.com. Yeah. Send it to that if I'll send you the article. Yeah. And then we won't spam you a bunch, maybe occasionally. Bryce, it's been like a year since we sent an email out. I was thinking about that this weekend. We have like a list of tens of thousands of people who have like requested to get an occasional email from us about investing and stuff. And we never send it. We should totally do that.
I have a list here. We're bringing on a new employee this week, and I've started.
Is that on the list?
List of things I'm adding it. I hadn't thought about, but I'm going to put that on his list.
Put it on the list.
Yeah.
All right. Anyway, this is the AI revolution call. And I don't know if you heard, but AI is like happening. Like it's actually funny. Bryce and I were around the world. We got back, I don't know, 10 days ago at this point, but we spent 19 days going around the world. And it was one of those things after talking to, what do you think, 45, 50 different institutional investors, family offices, high net worth individuals, and or random really not many random meetings. It was mostly the first three things I said there. And I think most people recognize that the AI revolution is happening. I think most people are trying to figure out how to invest in the AI revolution right now. If they're not already, it might be because they don't believe it's a good idea to invest at these valuations or something. Even if they believe that it could be happening, they worried about a bubble in AI, which is a fair discussion. We'll have that here in a bit. But everybody is sort of like, I get it. Not many people are thinking about the robotics revolution yet. And few, if any, people are excited about the space revolution, which I think is the third leg of the triumvirate revolutions that we're living through right now. Or not even living through yet. I mean, really, the robotics revolution is like the first. If the AI revolution's 10, 15% of the way through, I realized in Abu Dhabi, Dubai, and Hong Kong that not everybody got my baseball references. So I'm not, even though John D. Oliveira's brother-in-law is one of the greatest baseball players, he's a Hall of Famer. Let's just say Alex Bregman will be a Hall of Famer.
It's possible.
I would say it's very likely. Yeah. So that's his brother-in-law. Anyway.
Nephew, he said.
Yeah, whatever.
It's my nephew. It's my sister's boy.
Yeah. It's his nephew. He's literally blood.
Yeah.
I mess this up all the time. I've got generations off on this because I'm still picturing us at 30, John. We're 50-something. So at any rate, not everybody gets my baseball analogy, so I'll speak in percentage terms. If the AI revolution is maybe 10% into maybe 15% started here, the robotics revolution is like less than 1%, and the space revolution is less than 1/10 of 1%. Just barely an idea in someone's mind at this point. But all three of those revolutions are going to be worth tens of trillions of dollars in economic value and prosperity enhancement and what they create for the world and eventually the solar system and maybe even eventually the galaxies. So the AI revolution is here front and center right now. Let's run through a few headlines, meaningful things, and then we're actually going to talk a little bit about, is it a bubble? Bryce and I have some insights that we've been building on a model, actually trying to put some numbers instead of just in the air pontificating, which I used to get paid to do. Bryce, your first topic.
I think the news of the day is the AMD OpenAI deal. And so that should be the starting point. And I'll just give you the basics of the deal. So AMD and OpenAI announced a form of strategic partnership where OpenAI is going to build like 6 gigawatts of capacity, which is a huge amount of electricity. We measure data centers now and the amount of electricity that they use. So 6 gigawatts is like 3 nuclear reactors or something worth of electricity. And they're going to buy AMD chips to do that. And in exchange, AMD is going to give OpenAI warrants to purchase the stock for 1 penny a share. So basically giving them the stock over the next 5 years, as long as OpenAI buys the chips that they say they will buy and AMD's stock hits certain targets. So I think at the end, AMD stock has to be like $600 per share. Right now it's $250 or something like that after today's move. I don't remember where it closed at, but that's the gist of the deal. And it's one more deal that in the line of sort of circular revenue moving around between the chip companies like NVIDIA and AMD and the labs, OpenAI. And
so say that again. It's hey AMD. No, AMD says, hey OpenAI, if you buy our chips, then you can buy our stock.
Well, we will give you our stock.
Yeah, it's basically give.
So
yeah.
it's somewhat, you can see who's got the leverage in the industry based on even in the last 3 weeks, OpenAI has done a deal with both AMD and NVIDIA. When they did the deal with NVIDIA 2 or 3 weeks ago, NVIDIA got equity in OpenAI and gave cash to OpenAI to help them buy NVIDIA chips. In this deal, AMD gives not cash, but they actually give equity of their company to OpenAI. And then OpenAI can eventually sell that equity, $100 million at a pop, in order to buy AMD chips with the proceeds. And so OpenAI needs NVIDIA more than NVIDIA needs OpenAI, but AMD needs OpenAI more than OpenAI needs AMD.
One, not to complicate it, but how does what is NVIDIA getting in terms of a piece of OpenAI if OpenAI is not fungible?
It's John. They're not worried. NVIDIA's not worried about trying to sell whatever they get in equity from OpenAI anytime soon. The assumption is for everyone that over the next 3, 5, 7 years, that OpenAI figures out how to pay off Elon Musk for his equity stake. They figure out how to negotiate with Microsoft for their heretofore equity stake. And they also deliver the equity stakes that they've promised to NVIDIA and other investors along the way, and that there'll be a publicly traded vehicle at some point in the next, say, 2 to 5 years. And then at that point, it would be worth trillions of dollars would be the expectation. And at that point, if NVIDIA so chose, they could start selling down their equity stake, which would probably be worth hundreds of billions of dollars if all that works out the way that everybody hopes it does, except for the bears and shorts, of course. They don't.
And then how does Stargate figure in terms of, they're off building these data centers? Is it those data centers have NVIDIA chips, or they have both, or what?
Both. They would have both. Initially, they'll have NVIDIA chips, and Oracle is a major partner in building those, financing them, and helping run them, and using Oracle software inside of them. But yes, I mean, the idea would be that initially it's probably NVIDIA chips almost exclusively as they get ramped up already. Right now, they're turning on capacity in Abilene, Texas. OpenAI is. / Oracle and others are turning on some of that Stargate stuff right now. And eventually, it's even this AMD deal, those chips that they're talking about in this deal are not supposed to be delivered even for another year. It's second half 2026 before any of those chips are even delivered in the best case scenario. So, some of this stuff is pie in the sky. I mean, look, we're revolution investors and we're big believers in the AI revolution, but let's be clear, there is some bubbleliciousness in some of this stuff, and there is some circular dealings in some of this stuff. It's very different from Nortel and Lucent in the year 2000, 2002. Actually, I think that was 2003 when it all came to light. But from 2000 to 2003, Nortel and Lucent were secretly vendor financing their biggest customers, and Cisco to a lesser extent. Cisco is a lot more transparent about it, but Nortel and Lucent were hiding that, and it was fraudulent. And this is not fraudulent. You can dislike it if you want. It is a bit circular to have your suppliers investing in their biggest customers, who then use that money to buy more of the chips from the suppliers and all of that. But it's not fraudulent. They're out in the open. We all get to make our big boy and big girl choices, big they them choices on whatever you choose to do, with the knowledge that it is a bit circular, but it is going to be measured in trillions of dollars in coming years, and eventually probably tens of billions of dollars.
I forgot how much into the telecoms you used to be.
Yeah.
I had a box of your textbooks in my garage for like, I don't know how many years back in the day.
That's fascinating. I forgot that.
That had all those. Sorry, I lost track, but maybe I get it back.
Well, it does underscore that I do immerse myself in any revolutionary technologies that I'm studying, including 25 years ago when the telecom revolution was present and booming.
Yes.
So, Cody, for the people on the call, what is your view on AMD after this deal? Your view on NVIDIA after this deal? Your view on OpenAI after this deal?
All right. NVIDIA, number one. Look, I've been in NVIDIA since 2016, and it's frankly been the best investment, including Bitcoin in 2013 and Apple in 2002, at least on an annualized basis. And I still believe in it very much. It's one, it's not our biggest. It's probably a top 5 position in both of our funds, but certainly not our biggest positions. Not our, top 3 or 4 even. But obviously I'm still a believer in it. I think you still just, you want to invest in the most dominant platforms and the most revolutionary technologies. And there's no better example of that right now than NVIDIA. I wouldn't necessarily scream into it and buy every call option I could right now, but I also can think of worse ideas, frankly.
Before you go further, while you're on NVIDIA there, and you said, was it 2017 you said?
2016.
2016. What was it you saw at that time that made you go, I already know this is...
I didn't know. I made a bet, an investment, and have ridden it since. But it was, in large part, their move into turning GPUs into platforms for autonomy, car autonomy, robotics, and AI. And then certainly Jensen Huang's brilliance. One of our biggest tenets is always betting on brilliance. And I did recognize Jensen Huang was a genius back then. And so those would be the real factors that got me into it. And I started small, but over the last 8-9 years now, it's like a 220x or something. And it's, I hold it. I continue. It's my biggest position in my personal account, actually, at this point, just because, again, the gains have been so big, and I've been trimming over and over. I never should have, because it's at all-time highs, but I trimmed when it was probably up 30%. I trimmed when it doubled. I trimmed when it was up 5x. I trimmed when it was up 10x. I trimmed when it was 15x, 20x, 25x, 100x, 150x, 200x. 220x, and I still own a bunch, and now it's my biggest position, even with all those trims. AMD, I like it less. It's not the dominant platform. They certainly have done something well to get into the OpenAI into OpenAI's own platform of software and LLMs and all the magic that goes into making OpenAI. And that's a good thing. I was just speaking to one of my good friends who bought AMD at 90 6 months ago and still owns it. And his quote, I'll quote him, that today's move wasn't big enough. Didn't underscore how big this actually is. I'm not chasing it. I'm not in it. I don't even have FOMO about this one. I'd much rather own NVIDIA. But if AMD does actually sell tens of billions of chips to OpenAI, it's likely they'll also be selling tens of billions of dollars worth of chips to other hyperscalers, even CoreWeave eventually. Who knows? So that there would be upside from here if that's true. I think there's better ways to play the AI revolution than AMD.
Yeah, there's about the ways to play it is like if you wanted to be in OpenAI, but you can't, what would you be in that is kind of rides things similarly?
It's a great question. And I could, at the end of last week's call, we talked about the reason why we're in EchoStar, SATS. And it's because when the deal closes in the next year and a half or so, they will have $10 billion of SpaceX equity as part of their company. And the entire market cap of EchoStar right now is like $22 billion. So SpaceX is 40 or 50% of the actual value of the stock right now. OpenAI, as a percentage of NVIDIA, is meaningless. It doesn't move the needle for NVIDIA's market cap's $4.5 trillion. And so there's, they own, I don't know, 5% of OpenAI, you think, Bryce?
Yeah, I think they own $5 billion worth of it or something.
So, 5 billion out of 4.5 trillion is a 50-cent move in the stock.
Yeah.
So there are other ways to play OpenAI in the public markets, including a closed-end fund called DXYZ, but it's trading at, what's it probably now, 8 or 10 times book value? I haven't looked at the stock in a long time, Bryce.
I think it's only about 5 times book value, but
only 5 times. So instead of paying $500 billion for your OpenAI in DXYZ, you're paying $2.5 trillion. So I don't think that sounds like a good bet either.
I think CoreWeave is the best way to.
Yeah, CoreWeave, like as OpenAI does, CoreWeave will probably do also, but CoreWeave comes with its own risks. It needs access to capital for many years to come at reasonable prices. And that's one of the reasons, why the hyperscalers like Google, Amazon, and Microsoft, who heretofore have been funding their AI revolution investments with cash flow and cash on the balance sheet and very little debt, versus CoreWeave needing to borrow and even do IPOs and secondaries to get access to more capital. There's a difference in the risk, but there's also a difference in the potential upside, obviously. So anyway, and finally, or did I hit all three? I'm not a believer in OpenAI. I think Sam Altman is a scumbag. I want nothing to do with him. I would never invest in anything he ever touches. I don't like him at all. So I think OpenAI is a great platform, and there's no doubting, no arguing that Sam Altman has changed the world with OpenAI. It is a different world today than it was 3 years ago, and in large part because of what OpenAI started, and then its ability to drive this thing forward with those animal spirits and the access to capital and the magic that happened after the first ChatGPT moment. And that has forced all of these companies to spend now hundreds of billions of dollars each. And that's made the economy better, and it's making AI better. And it's a flywheel of prosperity that's happened in large part because of Sam Altman. But that doesn't mean I would ever be on his team.
Yeah, that's really interesting because it is so central. They are really central to a lot of what's happening. They're not the only players, there are others that I think matter as well. So central, and yet maybe just not even trustworthy in a way where you'd want to directly be involved. Right?
Yeah, that's right. I mean, that's it. You don't have to, it's, my mom told me when I was 20 and I was hanging out with John de Oliveira, and she was like, Cody, you know what your number one superpower is? And I was like, what? She said, surrounding yourself with good people. And to this day, in investments, I invest. You can argue if Elon Musk is good if you're in a partisan viewpoint or not, but what he's done building businesses and being pretty straight up with his investors and what he's delivered over the years is nothing less than amazing. Also changing the world. I mean, what a different world it would be today if not for Tesla creating the battery revolution and eventually the robotics revolution with humanoid Optimus robots. And what a world it would be without SpaceX getting people to the space station. People would still be paying billions of dollars to Russia, the country, to send human beings to space.
I don't have enough history knowledge to say, but who would you like if you had to think of, like, it's kind of like Edison, or is it like,
it's like nothing else, John.
What's that?
Elon Musk is an enigma.
Yeah. I was going to say, like, he's a combination of a couple of them, Edison and Rockefeller or something. It's like multiple industries, but being an inventor as well. And
that's right.
Yeah.
And not just what's amazing with him is even just like the Starlink stuff, where other companies had tried before to become a constellation for broadband internet, and they needed their own rocket ships to be able to send that stuff up at de minimis price compared to the revenue it would generate. And only Elon got it there. But once he gets it there, he's like, the way he's handled even his spectrum rights over the years has been brilliant. And he didn't spend a dime on spectrum until he made this deal with EchoStar. And somehow he was able to deliver broadband internet to my house for the last 3 or 4 years without having purchased spectrum rights, which otherwise are worth tens of billions of dollars typically. And so he is a great businessman. I mean, I'm no blind Elon fanboy, but there is no doubting the revolutions he's driven. Even OpenAI, it wouldn't exist were it not for Elon's money and brain.
Talk about like thinking big and thinking long term. There's nothing like it to be able to go, I'm going to do this thing and it won't happen for 15 or 20 years, but and then with the rockets or with the cars, it's like, and then it actually does happen. And it's like, I feel, I worry that he's so such an enigma. He's so one of a kind, because what we could do in our economy if only we had some more.
Right. I mean, it would be amazing if there were 100 Elon Musks in the world. And look, to be fair, that's one of those things I think about a lot, where it's like, Mozart only existed because his father was a musician and he was in the right time period to get funding from princes to write incredible music that could be played in the public and then passed down through the centuries. And, like, there are probably people that could have and are like Elon in their brilliance. But, if they're sitting there in Central Africa struggling to avoid violence with their time instead of channeling it into creating inventions for the world, we would never know. So hopefully as the world gets ever safer and we bring hundreds of millions of more people constantly into upward mobility, middle class and wealthy places, there will be more Elon Musks in the future.
I have an example of that proves the point, I think. There's a guy named John von Neumann that a lot of people haven't heard of, who was basically on a level with Einstein in terms of brilliant. He's involved in everything, game theory, inventing the aspects of the computer architecture. He was involved with the bomb as well, the Manhattan Project, but all these different things, mathematician, genius. And three of his classmates from like elementary school won the Nobel Prize. And so they're from Hungary. And there was this one area where just socioeconomically, it was middle class. It was a ton of kind of emphasis on education, but also the right kind of freedom of thought. And these people came out of it. And it's like, they're not related to each other. So, what happened to enable this to come out of just this place? So it argues that this could happen with the Musks.
Yeah, the old, their nature is a large part of it, and nurture is part of it too. You just can't get away from that paradigm.
Yeah.
Bryce and I have been working on a model. What, Bryce, did you have one more talk before I get to the model?
I was just going to talk about OpenAI's Dev Day that they did earlier today, and
All you, Bryce.
sure. So they did a big developers day, invited a bunch of software developers out to California, and rolled out some new features that you're going to start seeing if you're a ChatGPT user. But probably the most notable of the features was the integration of apps directly into the ChatGPT interface. And so they partnered with about, I don't know, they launched with maybe 40 apps that are already available on ChatGPT. Things like consumer apps, Spotify, Zillow, things like that. And also, specific things for developers that they might use, Canva, Figma. I'm trying to think of a few of the other ones. But anyways, so there's been this big debate in the software industry about what's going to end up happening to the app companies because it's so easy
And the
to
software as a service companies.
Sure. And you took me off a track. So the software companies have been trading down, not trading very well because everyone's worried that the AI is just going to replace all software. And today, I think, just kind of showed the market and the world that there's still a lot of value add in the application layer above the LLM layer. And OpenAI and the other AI companies aren't going to try to replace every single application from scratch. And there's actually a lot of value to just integrating with all of the existing apps that are out there and the existing workflows and existing features that OpenAI doesn't need to go reinvent the wheel again. And so it's pretty cool. You can basically control these apps through the ChatGPT interface. So if you're like starting a business, they gave an example, and he was, something silly like a dog walking business. And so ChatGPT makes your business plan. Okay. Then it integrates with Figma. You can make all your designs, your logos, brochures, your pitch deck. And then you can search, you're like, okay, chat, what would be a good business city to expand into? And it's like, oh, you should expand to Pittsburgh. It's like, okay, show me some real estate in Pittsburgh for an office house. So then it opens Zillow automatically, finds the house, find me ones with 3 bedrooms that are near a park, dog park. Okay, here's this one, right? And so you can just see that you basically stay within the ChatGPT ecosystem, and you can be pulling in dozens of different apps that might be relevant to what you're working on. So I think it's a pretty exciting development in software, and it's going to be like the App Store. So they published developer guidelines, and if your application complies with those developer guidelines, then you'll be approved to go on the ChatGPT App Store. And they released a software development kit, SDK, so that if you have a existing app, you just integrate that SDK, and you should be able to get on the ChatGPT App Store. So it's going to be another. Their goal here obviously is to become an ecosystem like Apple or Android, and have millions of apps that are built and integral to their platform, and then can be distributed to 800 million ChatGPT users.
And then you just talk to it. You're like, hey, ChatGPT, go through my Salesforce app and tell me the 3 people I need to talk to today, and send me an email, and send them an email with what they need to know. Mm-hmm. And it happens.
I question how much talking is going to be long-term, the interface, because there's still a lot more bandwidth to seeing stuff out, and maybe that's where, the apps do kind of retain some value, is that you talk about there are particular workflows that go with particular kind of work, and there's thought that's gone into what to show me. So I'm not sure exactly how that plays out, but like it is clear that OpenAI has concluded that money is in eyeballs. I mean, it can't just go feed other people their kind of knowledge, in through other people's apps. It's like they want they
want to be the interface. Yeah,
they want the actual individual. By eyeballs, I don't get it. The interface, ears versus eyes. I get it. The idea of that it's the users, the mass of users, the billion users is directly to them, not people they do the in-between thing as well, but they want that direct to them thing happening. They want to be in the.
That's a great point, John. It's interesting from the other perspective that just, I felt like it changed I forever have been saying that no matter how smart I am, I'm not smart enough to know all the different applications and services people are going to come up with on the AI platforms. But this made me realize I'm also not smart enough to realize all the different ways that AI and AI agents will be integrated with the world we currently already live in.
Yeah.
And so the existing services from Zillow to Figma to CRM suddenly have the ability to expand their total addressable market in a much simpler way, a much more direct way. They don't need you to ever download CRM, but you sign up for CRM through OpenAI, and whether you're looking at it visually and or talking to it and listening to it, you'll be able to do both. And you're like, hey, pull up my CRM dashboard. Oh yeah, look at all that stuff over there. Yeah, we figured out a system that would address that bottleneck in my CRM, in my handling of this customer that we're trying to, the customer flow that we're dealing with here. And it becomes the interface, but it also, like what Bryce is saying, it doesn't supplant the existing. It's not that you're going to talk to CRM and, hey, make me a software program AI app that does what CRM does. Rather, just use CRM and let me integrate with it through OpenAI and the AI intelligent layer on top of it.
It could be they become the new app store, the new marketplace, the new browser, the new operating system, the place you do things, which, like you're saying, the stuff that gets pulled in, since it's like a marketplace, the stuff that gets pulled into it, other people made, but because it's so smoothly integrated, the user even doesn't think about going off and doing whatever. They're like, don't worry about it. I'm just paying my, $150 a month now to OpenAI because I'm not paying others. And OpenAI is determining, like Netflix, which show is getting which piece of that money based on who's watching what. And it's like, who's using what app, let it happen smoothly kind of thing. That would be huge.
Yeah. And you underscore the fact that Bryce has been saying for a year that it might be Microsoft that's in the most trouble because the operating system level becomes ever less important if you can interface with OpenAI on a Meta glasses, on a smartphone, and pull up your CRM dashboard instead of doing it on a Windows PC, which you almost were required to until now. And if you're right, it replaces several layers from the operating system to the app stores and et cetera. So
I never liked the app stores from a standpoint of how disconnected the data was. I was a data guy. So it's like every time you use one of these, it's its own little island holding on to its own little data. And, you get 100 of them. They're great in terms of like variety and handling all different, very specific, tasks and things you might want. But then they also separate. But now if they can sort of come back together in that respect, yeah.
That's interesting, John, because a lot of people I think the driving force behind the strategy of both Google and Apple and their app stores to keep that data at least somewhat segregated was privacy. But in this day and age, as privacy just erodes constantly anyway, people are just like, whatever. Share the CRM data with the Zillow data. I don't care. Just I want my answers quickly and easily as possible.
The Gen Z programmers I work with say privacy is for old people. So it's one of those things that's clearly going, it goes away more and more over time.
Yeah. Another interesting thing that I saw that is sort of novel, but that they're going to start suggesting apps. So as apps get built onto the platform, someday there'll be thousands of apps on ChatGPT. And if you're working in there and talking to it and something comes up and says, hey, you might want to integrate or use this app that's out there. And obviously, there can be paid promotions, but then, there's going to be organic cases where it just suggests an app that should be used. And so there is actually some unique distribution possibilities there that if you have a novel app, people can find you because they're going to be doing things in ChatGPT, and ChatGPT might suggest your app if you're the best for that use case. I know if you ever look, like I don't spend a lot of time in the Google Play Store or the App Store when I had an iPhone. And they're suggesting apps on there and they're trying to advertise on there, but you're just usually when you go to the App Store, the app you're looking for. Whereas in chat now, it's going to be suggesting apps for you to use that maybe you didn't even know existed.
Even with GPTs before the apps happened, but like you guys went and made a GPT, you know, and you're able to go and, you know, have them come to you and find that was like, you know, making an app, but it's just keeps getting better. Yeah. Hey, before we go to the main event, the other thing that happened was OpenAI came out with Sora 2. And it is about as far ahead of Sora 1 as you might expect with a year and a half having passed. It's amazing. You know, there's still some things it's not got, but it's got like lip synced actual voice and sound behind things. And you know,
really good.
It's like, and so now they're going in there. The question is whether they even go kind of impinge on the TikTok territory. You know, people getting on OpenAI as the place that they go and say, I'm going to whip together this thing. And instead of it being me like dancing around for 5 minutes, whatever, I'm going to make a video that's of way higher quality than I could as an individual just by saying what it is I want. And they, at least so far, they were very, they threw out the whole concern about copyright. It was like, you know, make it about whatever, you know, SpongeBob and, you know, anything you want.
Today, John, they now, the copyright holders have to opt in order to let
I didn't expect that to stick around, but that was like kind of the first step. But anyway, I told my brother, who's a Hollywood producer, I told him, you know, a year and a half ago, Hollywood's gone in 10 years. And he said, that's good that I'll be retired.
Yeah, but, so it's another just indication of how much this stuff can advance and how quickly it can do it, and how we're still, though, at the dial-up internet phase of the AI revolution, because you still can't, you know, eventually it's going to get to a point where you can prompt it to make you a 30-minute episode with music, voice, actors, special effects, everything you want, and it'll do that. But just now we're still at these, like, how long, what's the longest you can make a Sora clip?
15 seconds, maybe. And other ones do like a minute.
And it's just compute. Like the ability to make a 30-minute movie exists, but it would just cost so much on the compute side. And that's why there's, you know, as the AI revolution continues to innovate and follow Moore's law and other laws of ever more efficiency, that stuff will come.
Well, Pixar used to be, you know, they'd have those, try to remember, Silicon Graphics workstations, very high-end computers that they would leave like running overnight to do a couple of frames.
Right,
you know,
to render 2 frames.
Yeah, and then it'd be months later they'd go and piece it together, and they'd have this amazing, you know, Toy Story. And it would literally cost them
$150 billion in time, power, and compute to get those movies made.
A little lower money-wise, but
no, come on, those movies are $100 billion, dude.
150 million, not 150 billion.
Oh, sorry. Yeah, an order of magnitude less. 100 million, 150 million.
100 million. Yeah. So it's, but it's the stuff is advancing very rapidly, but as you say, we're still at the beginning. Anyway, go ahead with the model.
All right, here's where we're at. Existential. Whether you know it or not, if you invest in stocks, you're long the AI revolution. And you need the AI revolution to work out from here rather seamlessly, if you don't want another downturn, maybe even a crash at some point. The bears, the shorts, the AI haters will tell you that there's no way that the CapEx that is being spent, the money that is being spent building data centers that run the AI stuff, they say there's no way there's going to be enough revenue to justify the hundreds of billions of dollars already being spent building this stuff, much less the $1 trillion plus expected over the next 5 years. And that's the question. That is the question. if the bears and shorts are right, there's a bubble. The market needs its ass kicked. There's going to be some brutal downturns here. Economy's going to get ugly. Markets are going to get ugly. Access to capital for these AI companies is going to get difficult and more expensive. NVIDIA's going lower. AMD's going lower. Avago's going lower. Google's going lower. If you own the S&P 500, you're in the stuff. If you're a dividend investor, maybe you've got a little bit of okayness, but even that, the markets will come down. PEs will come down. Things will contract. And that's how this stuff plays out if it doesn't work out right. And that's a possibility. On the other hand, instead of just shooting from the hip and pontificating into thin air with no semblance of triangulating some reality, you don't have any answers. It's anybody's guess. So what Bryce has spent today doing, he came up with this framework that he should look at the last 5 years spend on CapEx building the AI, data centers, etc. We'll do a rolling total for that into the future as he builds his model. We want to know, what is the impact on GDP and productivity? We're not talking about the impact on the CapEx and spend on GDP, but how much are the services and applications that are being built on AI impacting productivity in corporate America, in the economy, in retail world, etc. And then we want to know, what is the actual revenue being generated as a percentage of that 5-year rolling total? Bryce, did I say it all properly?
Right. And so we're just trying to see if there's some kind of if the returns make sense, if there is enough return to justify the spend, and whether it's going to justify continued growth in CapEx spending. Because a lot of people are just looking at, well, OpenAI is going to generate $12 billion in revenue this year. That's not enough to justify trillions of dollars in investment. They're going to lose $150 billion over the next 5 years. But it's not just OpenAI. It's a much larger ecosystem of AI companies. The cloud companies themselves are generating revenue independent of the AI companies. And if the returns are, exceed the cost of capital by a sufficient margin, then this train rolls on. And nobody is putting pen to paper on that. Basically, I think that the arguments basically boil down to, people think AI is productive and helps people actually do their jobs better, more efficiently, or it doesn't. It's this joke. It's a fad. It's only good for making stupid videos, and it will never justify trillions of dollars in annual capital expenditures. So that's kind of the framework. The other thing is just that the amount of spending is so big by any metric you want to look at historically, even compared to recent, infrastructure build-outs like the fiber build-out in the 2000s and 90s. These numbers are huge. I mean, $400 billion this year by 7 companies is unheard of. And
that's how much they're spending on making AI.
Yeah, that's how much they're spending. And the bears love to say, well, look, this is an inordinate amount of money, can never justify this. And one of my points is like, look, the scale of it is actually a testament to the usefulness of the product. This isn't like a sideshow. This isn't something like Google decided to do one day and they're like, hey, we're going to try this AI thing. Every tech company on the planet is working on this. The biggest tech companies are investing maybe 80 to 100% of their cash flow this year in capital expenditures, something they've never done before. They're all in. And so if it doesn't work out for them, their stocks are getting cut in half, down 70% maybe in some cases. And so these guys are betting it all. And I think that's actually a bullish thing, that the smartest people in the world are investing their own money and all of their own money on this new technology. It's not just some sideshow. It's the real deal.
Importantly, other than OpenAI and CRWV, I mean, look, there's certainly other people's money being spent. There is IPO money. There's venture capital money. There's other corporations' money, like NVIDIA giving money to OpenAI to spend. There is other people's money being spent building the infrastructure. We don't want to pretend otherwise. But the vast majority of the spend, probably 70 to 80% of the spend in building this infrastructure, is from the 6 or 7 most sophisticated, most valuable, most profitable, most technologically advanced companies this planet has ever known. And that says something. That doesn't mean they'll be right. It all could be wrong. If agents don't getting better, if you don't end up being able to make a 30-minute movie off of one prompt, if the coding doesn't just eventually solve itself, if design software doesn't keep exponentially advancing, there's risks. That's the bet. That's our job. I mean, that's what we do for a living. And so we immerse ourselves in it. We learn it. We study it. We put numbers into it. We build models. We build algorithms. We build analysis and homework, and we do more and more, and then we do more. And then just like my dog, Jim, the golden retriever, when Lori asked me, how many pets does Jim actually want? And my answer was more. How much work do Bryce and I need to do to be as good as investors in the AI, robotics, and space revolutions as possible? The answer is more. That's all we can do. More.
You were talking about these, all the companies are going all in on AI, but then an AI in order to do what? So they do whatever companies have been doing, but I was saying, here's somebody talking about how, a few years back, the investment was in every stupid thing, like, oh, another delivery company or whatever, thing it might be. And now there's a lot more focus on energy, other kinds of infrastructure, like things that are needed to make all the stuff work. So what about that aspect where, yes, they're all in on AI. Are they making the right kind of decisions about what they're, using it to do?
Probably. I mean, that's the marketplace will sort of triangulate that out on its own. And the services and applications that grow will require ever more compute and get ever more customers, and their own individual respective flywheels and ecosystems grow upon themselves. The idea is that people save time, workers, employees, white collar, secretaries, and eventually in the robotics revolution, blue collar, manual labor, etc., that people save time. They are more productive. They do more in an hour than they used to do. And then they have extra time to do more stuff more productively, and that feeds upon itself. And the gross margins at the S&P 500 continue to expand, just like they have been, based on the internet revolution and the smartphone revolution, the app revolution, and all the stuff that you can send you a text message that your flight's delayed so you don't go to the airport at the wrong time. All of the stuff feeds on itself. And if you get more productive, you're willing to spend more money to get yet more productive. And then your competitors who are not investing in AI are not getting more productive. And then they start falling behind. And so then they have to go, oh, crap, we've got a prisoner's dilemma. We either lose because our competition's getting ever more productive in handling their customer service, their supply chain, bettering their businesses in every way, retaining customers, you name it. Whatever AI does, the magic inside. Their people learn more, answer questions faster, everything that happens. It all happens, and then the guy who's not doing it is like, oh, shit, I better start spending too. And then they have to start spending, and they ramp up spending faster, trying to catch up with the guys that are already doing it. And eventually, that's sort of like the creative destruction thing. The most productive companies using the AI the best beat their competitors out, and then the gross margins of the S&P 500 are higher than they used to be, and the net margins are higher than they used to be, and the growth rate is higher than it used to be. And that's what's happened for the last 200 years in this country. It's made the bull markets over centuries happen.
Also, how somebody goes in and spends $20 on lunch in some city, and then that money goes out as kind of payroll for the folks that work at that place, but it also goes to paying on the supplies on that restaurant. And then those suppliers who got the money from that can use it to buy more. It's like the whole thing about how $1 is worth way more than $1 if it's moving around.
Yeah.
That's the magic of velocity of money. Yes.
Yeah.
The best, I think you actually gave me this example once when we were kids, John, in college. You said there's a scenario where like one guy owns the dollar of bank and the bank owes another guy, a corporation, a dollar, and the corporation owns their owner $1, and the owner gives $1 to the guy at the beginning of the chain, and he gives the dollar to him, and the corporate bank gives it to the corporation gives it back to the guy who gave it to the first guy, and now there's no more debt in the economy.
It is legal check kiting.
It is, but that's the magic of the U.S. system above all, and that is the magic of any economy, at least how it does work. And you can go to even the poorest country in the world, and there's probably at least one high rise that somewhere the magic of their economy has created some wealth. And what's beautiful about the U.S. is we have, a higher percentage of people in the middle class and upper wealth than most other places do. And obviously that percentage has declined, but so has the actual prosperity level of even the bottom people at that disparity. So look, I'm not going to pretend it's a perfect world or that the U.S. is perfect either. I mean, clearly we've got our own issues and disparity and poverty and sadness and kids who don't have access to healthcare and food that they need and everything else. But the way that you improve any economy, any society, is to create more prosperity and more economic activity. And that's hopefully what the AI revolution is all about.
Bryce, your model, is it more macro for being able to tell, like, are things is it paying off that the capital is happening the way it is? Is there the correlation there, so to speak? Or is it also micro that you can go in a particular, a particular firm and what they're doing and go, now, because we found out the fact that model works, it makes sense for them to do this investment? Or like, how do you see the model getting used?
Sure. So it's mostly a macro model. We're looking at employment as a whole in the United States and estimating how much of a productivity impact, each sector of the economy is seeing from AI. And, I've read a lot of studies. There's some data out there on that, the hours saved per employee, the adoption rates, things like that. So basically went sector by sector, try to estimate what, the degree to which AI is actually helping the productivity in that sector. And then, extrapolating that to the whole economy and comparing that to the level of spend by these top 7 or 8 companies, which make up, 8 or 9, 90% of the spend probably. So that kind of gives us the macro framework to understand whether at the system level returns are generated or adequate to justify continued investment. But then from there, the use case for us as investors is to find the companies that are doing this and the ones that are benefiting the most. And we own 2 of the major hyperscalers, Google and Amazon. We also have bets on CRWV and Meta and others in the AI universe. So if we're confident that the overall system makes sense, that we should, as an economy, keep spending this level of money on, investing this capital in AI infrastructure, then it gives us the confidence, we kind of have a bullish macro framework that gives us the confidence to make individual bets on the companies that are driving the revolution.
Let's put some numbers to it, Bryce. So right now in your model, we're looking at $130 billion of GDP productivity. Let's not call it GDP. Let's call it productivity enhancement within GDP. And if GDP is 2025 and GDP this year is 35 trillion.
Yeah, it's right around, it's 30
trillion. So you're talking less than 50 basis points, less than 0.5% of GDP impact on productivity. So there's a very reasonable, I think, assumption to make. I think AI is certainly doing at least a little bit of impact, less than 1%, less than 0.5% on GDP. It passes the smell test. And the spend over the last 5 years from the 80 or 90% of the spend has been what, Bryce?
And around 1.1 trillion dollars over the last 5 years.
$1.1 trillion.
That includes the 2025 number.
3%.
And what did you get for revenue over the last year? What this year, 2025 revenue on AI agents, LLMs, and percentage of cloud that is being generated as revenue because of additional demands from the AI revolution?
Somewhere from between 50 and 70 billion dollars.
So let's call it 60 billion. So 60 billion on 1.1 trillion is 5%. So no,
60 billion on 1.1 trillion.
yeah,
Is that
That's about 5%.
okay? Yeah.
So right now, at this very moment of dial-up internet version of the AI revolution, you can't really justify the CapEx yet on those numbers. But they start working quickly over the next 2, 3, 4 years as the revenues are going to compound quicker than the spend compounds. And what's your model show for 2029, Bryce? Total spend trailing 5 years.
The total spend in 2029 will be up to 3 trillion at that point.
And total revenue will be
2029. I think the AI revenues will be $614 billion. So it's about a 20% return on investment.
That's probably the threshold at which it needs to be. That's the minimum. And so there you can, if this model is right, there's some concern. That's not, those numbers don't work as well or as bullish.
Well,
as we would like to
I think that's fantastic. If you can invest
that doesn't sound so bad.
20% return, that's a fantastic rate of
If you
return.
get from 5 to 20 in that short number of years.
All right, that's the point. I guess the point being that you need to see the growth as a percentage of the spend. If you go from 5% to 20%, that's a trend line that people can get excited about. 20% itself is the baseline for a 5-year depreciation schedule on the infrastructure. And so 5 years, it's 20% per year of depreciation. And so that's the baseline for this to start working out. But I don't disagree. If you get that trend going from 5 to over 20% over the next 4 or 5 years, the spend will continue because most likely in 7 or 8, 10 years, you're somewhere at a spot where it's generating a lot more cash than you are spending. And then it actually is all justified on a major big scale that makes it all work out for everybody. Is that what we're getting at, Bryce?
Yeah, I mean, 2 things. I do think that the rate of return is going to get up to closer to 30% within 10 years. But even at the 20% ROI, even though that's just a 5-year, it's less than it'd be if you roll a 70. What's that? That's a 3.5 year payback on a compounding basis, and I like that. I don't think that the asset base is going to be worth 0 at the end of the 5 years.
2 points you just made that are fantastic. You're right that the 20% compounds while the depreciation doesn't. And so it actually is a nice little math thing you did right there. Good job. And then you're right. Even right now, when you look, there's still A100s from 5-6 years ago that are doing inference for ChatGPT inquiries and whatnot. And so on that basis, there's still value, even though it might only be 5% of the actual revenue being generated by those platforms. If you're still generating 5% of your revenue from products that you bought 5 or 6 years ago that are running at 100% capacity, by the way, that means you're actually generating pure free cash flow on an accounting basis in that scenario.
Yeah. So right now we think that there's, if we think this model, we've tried to use some conservative estimates. We've tried to use realistic estimates. We've tried to support it with data from surveys that we've found and triangulated. And to me, it looks pretty clear that there's room for this CapEx to keep going and to keep spending on AI to keep driving higher and higher productivity over the next 5-10 years. The train rolls on.
That's and look, this is a snapshot of what we've spent today doing. This Bryce told me this idea 6 hours ago, and I was like, yes, you know what? Like, it's the more I kept thinking about it, I called him back a couple of hours later and said, drop everything else you're doing, because this really is probably the single most important question out of everything we're doing in our investing lives right now.
Right.
Can the revenues justify the spend on CapEx? The bulls are blindly saying yes. The bears are blindly saying no. Let's try to triangulate some reality around it. Let's build some models. Let's put some time and energy into doing it. We'll update you guys next week after we think this stuff through. We're going to deep dive on it ever more, just like Jim, the golden retriever. We'll do more and then more.
Yeah, I built the underlying economic model back in April,
Sure.
the depths of the market, when we were just trying to understand what the total impact to AI, to GDP could be from AI. Just because, at that time, everybody said we're going to go into recession. Trump's tariffs were going to mess up the whole supply chain. And, the bank's average recession odds for 2025 was like 50%. And so I built this model, and I just like, just AI's impact alone is probably 50 bips on the productivity side, another 1.5% on the CapEx side. So you're looking at, 2% GDP impact from AI just from those two things. So I don't think we're going into recession. And so that kind of helped us, stay bullish throughout the crash in April.
The depths of the market and the panic. And you're right, Bryce, you've been building this framework for probably even longer than that, but you built that model first around that time. And I told you this today, you were way ahead of everyone on understanding the impact that GDP was actually going to have in 2025. I don't think anybody was there and now even today you can read articles and they're like, 2025, the impact on GDP from AI was.
Yeah, right. 2%.
But I'm being nicely done, Bryce. So that's where we're at. That's the story. I guess you can go to tradingwithcody.com if you want to get that article from Bryce. We're not sending that one out for free. But we write a lot. You can read that stuff at tradingwithcody.com. Reach out to us if you just actually want to get an occasional email, which will be more frequently than it used to be once we bring on our new analyst partner guy, Craig, in 72 hours.
All right.
Yeah, very exciting.
Congrats.
Onward and upward. I guess that's the final words for me. What do you got, John Dio?
I don't have any really relevant final words. I told you guys you were on your trip. I went to Boston.
Cut you off. That's it. No relevant words. Got nothing.
I went to Boston and hadn't been there in a very long time. Saw the house I lived in 30 years ago. So got to show that to my daughter. But it was it's a city I really like. It's a really cool city, and you just feel like every city along the East Coast has its own character. They say that in Boston it's what you know, in DC it's who you know, and in New York it's know-how. So
John, how long did you live in Boston? What years?
3 years.
What years were that? Early 90s?
In the 90s, somewhere in the 90s. Yeah, after college.
Bryce-topher, what do you got? Last word.
Tomorrow Tesla's supposed to do some kind of product unveiling, and product unveilings at Tesla always disappoint for some reason. Marcus always hates it, and so just a heads up if you're long Tesla.
Did you see the hands? Did you see the new hands on the Optimus?
Yeah, but that was a week or two ago. This is they did something over the weekend, a 7-second clip of a wheel spinning. Bryce, I totally agree. It's going to totally disappoint the world. And here's what it is: it's HVAC systems for home and business.
Okay,
and it's. Everyone's like, wait, we thought it was like a new Optimus flying robot, It was like the partnership with Archer. Have you seen that nonsense?
Yeah.
Everybody's like, it's a robo taxi that flies, and they're partnered with Archer.
I heard it was.
I didn't look. I'll bet you anything. Archer was up 20% today, and that's the stock you don't want to own tomorrow.
No.
Tesla might be down 5 or 7%.
You're right.
Archer will be down 20%.
Archer was up 17.9%.
Yeah, give it all back and more if it's not Tesla partnership tomorrow.
No, it's a fan inside their iPhone.
It's HVAC. It might be the most boring product that Tesla's ever announced. But it could be $100 billion business in 5 or 10 years, man. Like if they announce an HVAC that's 30% more efficient than any other thing on the market, like everything with Tesla, it's their market to lose because the most energy efficient products win over time.
What if they just made it look big and it's actually this very tiny fan inside something electronic?
Their own GPU.
It's hold on.
Inside their iPhone competitor.
Yeah, so somebody this weekend was like, did you see the new Tesla phone? I was like, what? And they're like, yeah, Elon dropped a phone. I'm like, no, he didn't.
No,
I saw it on Facebook. No.
That's this Nigerian video that's always, what is that?
It's an Optimus robot.
Oh, nice.
Model version. What if they're releasing a miniature action figure Optimus robot
that can walk around?
That would be awesome. I would buy that. I pay $800 for a miniature Optimus robot.
Well, it can do kung fu, so
yeah,
that would be badass.
All right, good one, Bryce.
But it's going to be HVAC.
I like HVAC.
All right, peace and love. Thank you, Johnny Boy. Appreciate you as always. Bryce, thank you. Everybody watching, thank you. Peace and love. We'll see you next week.
Later. Bye.